In this video, I'm going to break down Vice President Kamala Harris's current proposal for the new tax plan that she would like to enact if she gets to office. What she wants to do is hike up the taxes for the wealthier individuals in America and essentially lower taxes in ways of certain credits for the lower income taxpayers. One of the biggest and most controversial, I would say, proposals in her plan is taxing unrealized gain, an unrealized phantom tax, with a proposal of the ultra millionaire tax that Elizabeth Warren proposed a little while back. You can check out that video right here. Now, what's unrealized gains? If you have a trading portfolio, an ordinary trading brokerage portfolio, not something that you have in a retirement account, but let's say you have an account in Charles Schwab or Fidelity and you're buying stock. You buy a stock for $200 and that stock jumps for $300, but you haven't sold it. You're just holding it in your portfolio. Generally, you wouldn't recognize any taxable income from that kind of transaction because you're still holding it. That gain hasn't been realized. It's generally realized when you sell it. So when you actually sell that stock, then with current rates, you're going to pay a tax on that capital gain ranging anywhere from 0% upwards to 20%. That's really depending on where your tax bracket is and the other gains that you have in your portfolio that year. What Harris is proposing is to actually tax that unrealized gain, meaning the holding gain on the stock that you haven't even sold yet, at a 25% rate. I don't really know how that makes sense. What's essentially going to happen is you having to shell out cash and basically being forced to liquidate some of your portfolio to actually pay that tax. It's a dilutive effect. It's going to dilute not just your wealth overall, but dilute your portfolio, and it's going to be an opportunity cost as well, because you're going to be forced to sell stock that you weren't planning on selling and just holding just to pay off this phantom tax, as I like to call this. And the other question that we have is, well, how is this tax even assessed? I would assume that they would look at the value of the portfolio at 12/31, end of the year. Otherwise, I can't imagine that they take some arbitrary number to assess the tax on. And then what about unrealized losses? Are you going to be able to benefit from those as well? Because as you know, the market is volatile. That stock can be worth, in our example, let's say $300 at the end of the year, but then a few days later, it can drop back down to $200. And what happens then, right? It's a really slippery slope. I'm curious to see if that even gets through Congress. Another thing that we should look at while we're on the topic of capital gains is the proposed increase to the long-term capital gain tax rate in general. Harris is proposing increasing that tax rate to 28%. Yes, I understand that she's proposing this to individuals that earn $1 million or more in income. However, you have to remember that there's already an assessment of a 3.8 net investment income tax that is assessed on those capital gains. So what I said a few moments ago, where the maximum capital gains rate is 20%, yes, indeed it is, but if you make a certain amount of income, you're already assessed an additional 3.8. So your effective tax rate in that scenario is 23.8%. If we bring it up to 28%, we add that additional 3.8% of net investment income tax, which, by the way, they also want to increase. That's actually going to push that long-term capital gain tax rate to almost 32%. That is a lot of money. We're already looking at short-term gains being taxed at your effective income tax rate. Having long-term gains taxed at a 28 plus 3.8, which is 32% income tax rate, that's egregious. Also, we have to take into account, we're talking about federal taxes here. The states that individuals live in also play a significant role in the overall income tax that taxpayers are paying. So if you're living in a state like New York, specifically in New York City, where the maximum tax rate is close to 15%, we're talking about 32% plus 15% on a long-term capital gain, which is 47%. We're talking about close to 50% in tax from your capital gain transactions. That's ludicrous. And that's just investment income, passive income. This isn't something that you're earning through a regular job. Keep that in mind when you're at the voting poll. Now, the next thing that I want to discuss with Harris is Kamala Harris is proposing a $25,000 first-time homebuyer credit. Now, is that a good idea or not? Let's delve in. This may sound like a great idea, if you're going to get a $25,000 credit. I believe it's over a course of 4 years or so. But what we really have to realize, going to that macro thought process, is if sellers are going to know that buyers are going to get that $25,000 credit, I believe that ultimately that credit is going to be realized in cost of homes in the future. So this may be a net-net effect where the only people that really benefit from this are the sellers. So it may not really benefit us as we think that it will, just like when a lot of dilution happens to the US dollar, as we had with the $600 bonus checks during COVID and increases of minimum wage. It really trickles down and it hurts the ultimate consumer, the end consumer, at the end of the day. For those of you that have kids, Kamala Harris is proposing an increase to the child tax credit. This is actually something that makes a lot of sense because she's going to stagger the increases in the child tax credit. So the first year, so for newborns, those of you who are having babies in the current year, you will get a $6,000 child tax credit in the first year of life, which I think is extremely generous because being a parent, those of you that are parents as well, you know that you're spending money on diapers, on formula, sometimes you need some childcare to come in. That's an actually extremely generous credit that many parents can definitely benefit from. Now, she's also proposing to increase the child tax care credit, which is currently $2,000 to $3,600, which, again, those parents out there watching know that that's going to be a significant help because raising kids is quite significant. Today, we see that kids are still at home during college and post-college can be quite significant when you're incorporating extracurricular activities for younger kids, childcare for younger kids, food, obviously the shelter, clothing, etc. We're talking about a significant investment in your kids. So that can hopefully help some people out there. Now let's segue into Kamala Harris's 1031 exchange proposal. The 1031 exchange is a real property exchange vehicle where you essentially defer the gain into a property that you're acquiring, or essentially swapping. What that means is you have rental property A, you want to buy rental property B and get rid of rental property A. So what you're going to do is enter a 1031 exchange and sell off rental property A, buy rental property B, and as long as you follow the terms of the exchange and go by all the guidelines and rules, you can take the capital gain from rental property A and defer it into rental property B, not having to pay the gain on selling rental property A. Now, currently there's no limit on what you can defer into the second property, but what Kamala Harris is proposing is to put a $500,000 gain or cap on that exchange. So you can only defer up to $500,000 and anything in excess is going to be taxed as a long-term or short-term capital gain. And if we're looking at her long-term capital gain proposals, that may be taxed at a 28% tax rate. And let's also take another step back. That also may be taxed, just the holding of that rental property may also fall into that unrealized taxable gain proposal as well. So this is a slippery slope. One other thing that I wanted to mention about 1031 exchanges, they've already been diluted over the years. As the current tax law is today, we're only allowed to have 1031 exchanges with real property, meaning real estate. Whereas before, in prior years, we were actually allowed to swap other business assets as well, meaning a truck for a truck, a boat for a boat, a piece of machinery and equipment for another piece of machinery and equipment, and also take advantage of the 1031 exchange. That was actually X'd out several years back, and now it's already limited, and now Harris is proposing to put another limit on this exchange as well. With this trajectory, it's only inevitable that that would just be wiped out altogether if they keep going down this path. Slippery slope. Think about that. When it comes to businesses, Vice President Harris wants to increase the current corporate tax rate from 21% to 28%. Now again, this may sound like the rich are going to pay their fair share, but we really have to go back and really analyze this from a macroeconomic perspective. Whenever taxes are imposed on corporations or the wealthier individuals, what corporations and businesses seem to do is limit their resources that they're investing back into their business. Now, what does that mean? They may figure out ways to cut down their workforce because they may not have that additional spending power to increase the workforce or maintain it to where it is today. And the opposite is true as well. So when we have a cut in corporate taxes, such as what we experienced with the Tax Cuts and Jobs Act, where the tax rate went from 35% to 21%, there was an increase in jobs. And that's generally what happens overall. And the surprising factor is here, not only do jobs in the economy grow, but also tax revenue grows, because more companies are also more incentivized to get more stuff sold, done, produced, etc. Because they know that the tax rate is lower, they can hire more employees, invest more resources into their business, and grow their bottom line. Because the alternative is, we can't put the money back into our business, we're gonna put the money back into Uncle Sam's hands. And then Uncle Sam will invest it at his own discretion. And a lot of people feel very differently about how Uncle Sam invests our tax dollars. So let's keep that in mind come election time as well. Now, one underlying theme that both Trump and Harris have is the no tax on tips. Now, this is something that we've been discussing for quite some time now, and what essentially they're planning on doing is not tax any tip income. And this is actually a very interesting industry right now, because right now tips are really not that regulated. It's very hard to enforce employers to report and track the tips because they're hard to track, especially if the staff is getting cash. And in addition to that, there are procedures in place right now in the tax system that encourage employers to report tip income, and that's purely through tip credits. This is already an area that is underreported in general. So by them eliminating it, I don't know if it's going to play a significant role in the tax loss that the federal government is going to realize. Now, a beneficial part of Harris's tax plan is the increase of startup costs for many businesses out there. Now, the current landscape and the current law allows up to $5,000 of startup costs to be deducted in the year that you start your business. The rest, anything over and above $5,000, is actually amortized over 15 years. Now, what Harris is proposing is to be able to deduct up to $50,000 of startup costs in the year that you start your business. That is a phenomenal idea because it's going to actually allow startup business owners to get some cash back into their hands through ways of deductions. Meaning your actual deduction for the current year is going to go up essentially from potentially $5,000 to up to $50,000. And for all those business owners, you guys know that generally the first year in business is extremely cash intensive and one of the hardest years to get through. It's actually a very generous proposal out there, and we'll see if Congress is going to go with that and pass it. So this is what we currently know of what Harris wants to propose if she gets to office. There are a lot of things here that can benefit you or maybe not benefit you, and you have to really take everything into account. And also remember that there are a couple of things that we have to look into. How this is going to affect us not just for the short term, but overall for the long term, and also how it's going to affect you individually. Come November time, understand what the president that's going to be in the White House wants to do with your money. And if you're comfortable with it, vote, because that's how you make that decision. All right, thanks so much for watching. Like, follow, and share for more.